Hello, everyone. A very good evening. Hope you had a great start into the new week. We are delighted to have you participate in our webinar, Reinventing Corporate Banking in a Digital First World. Before we start, a little bit about the platform we are on right now. Please use the Q&A option at the bottom of the screen to post your questions anytime during this session. You could address the questions directly to specific speakers if you wish to, and we will answer them at the end of the session. So I think we can get started. Today, as most of you might know, digital transformation has become the cornerstone of success for banks and financial institutions across geographies. This holds true irrespective of the fact whether they are catering to retail, corporate, or enterprise customers. However, there are a lot of changes that we saw early on, which were predominantly for the retail banking side. But of late, what we have seen is the corporate banking space too has adopted aggressive measures to digitally transform its product and services. The recent turn of events that has reshaped the world has seen a fast tracking of digital transformation initiatives. So how is digital transformation reinventing corporate banking in a digital first world? Joining us today are three eminent personalities from different regions of the world who have been closely associated with the banking industry for decades and bring in a plethora of experience in the corporate banking space. So we have today Joost Hopperman, who is the VP and Principal Analyst at Forrester, Andreas Anelauskas, the Director Client Relationships at AGTB, also known as the Anglo-Gulf Trade Bank, and we have Stelios Pandovakis, Head of Solution Architecture, Digital Transformation Division at National Bank of Greece. We extend a very warm welcome to all of our panelists. Let me begin by introducing our very first speaker for today, who's Joost. Joost focuses on banking technology, applications, and architecture to help clients make the right choices in a very fast-changing market. He has been helping banks understand the key dynamics of banking applications market and make very smart decisions. He focuses specifically on digital banking and forward-looking architectures such as digital core banking, digital banking platform architecture. He also helps banks prepare and execute digital banking transformation programs. Joost has been a featured speaker at many industry events so far. So today, Joost will be sharing his thoughts on what is the state of transformation in corporate banking, what does a typical application landscape in corporate banking look like, and how can corporate banks move forward? So over to you, Joost.
Thank you very much indeed. And to start with, when I hear this long introduction, I'm always wondering whether I get introduced to someone else. But in any case, I would say let's start with a good afternoon, good evening, good morning, depending on when you are today. First of all, let me thank iExceed for giving me the opportunity to talk about one of the most interesting topics in banking, basically about digital banking for corporates. So the question is certainly, why is this so interesting? And corporates basically expect more from their banks than what they can get today, because they know what is possible in retail and consumer banking today. Certainly, this is the rule, and there are certainly exceptions. So let's have a look at the state of digital transformation. Let's compare financial services on one side and corporate banking on the other, using some data points from Forrester's Financial Services Architecture Survey. And we all know that the financial services industry, and particularly banking, needs to undergo a huge transformation to deliver way more digital services than today. And our survey tells us that 9 out of 10 institutions, to be precise, 88%, work on transformation or want to start by the end of next year's latest. Further, 3% believe they already finalized that transformation. My take is that they finalized the first set of steps of the transformation program only. Maybe I should delete program, because digital transformation isn't a program anymore. It needs to become, and in some cases it already has become, a continuous activity. So what about corporate banking in this context? Here, only 7 out of 10 banks work on the transformation or plan to start doing so soon. And not a single one thinks it has finalized its transformation program. Thus, it is not a huge surprise that not a single corporate bank believes its applications and infrastructure allow it to best serve its customers today. and only 6 out of 10 corporate banks believe they will be in a better position in 4 years. Just to offer a comparison, today 14% of financial services institutions think they are in this great position to best serve their customers today. This is certainly not great, but much better than in corporate banking. And you also have to keep in mind 83% think they will be in this favorable position in 2024. This includes a not so positive side of the corporate banking responses. So what are the reasons for this huge difference? We certainly need to keep in mind that corporate banking, much more than retail banking, remained, at least to a larger extent, a relationship-driven business for a long time. Inefficiencies seem to be acceptable as long as revenue and profits were fine. Examples certainly include trade finance and syndicated lending that are typically not seamlessly supported by banking applications, to phrase it mildly. And again, there are certainly exceptions. However, the reasons for this situation are not only on the side of functionally rich, but in many cases, old-fashioned corporate banking applications with insufficient agility. Reasons also reside in corporate banks themselves. Let's again have a look at some data points. 3 out of 10 financial services institutions believe that they belong to the majority of technology adopters and adopt new technologies as soon as feasible. They consider themselves as fast followers. And on the corporate banking side, the situation is very similar. Let's move back to financial services in general. Here, 1 out of 10 institutions, actually it is 13%, consider themselves as early adopters and innovators. This certainly means the industry is not extremely innovative, but there are innovators that lead, innovators that the fast followers can indeed follow. This is not the case on the corporate banking side of the house. No one considers its firm as an innovator. So which bank should the fast followers follow? The good news is the situation is changing, as we will see in the 2 sessions after this one here in a few minutes. One of the reasons for this current situation in many corporate banks is the shape of the many off-the-shelf corporate banking business applications that are used today. Some offer rich business capabilities, some great architectures and technology, and only a few offer both. While 4 out of 10 institutions want to replace their core banking solution, for example, only 2 out of 10 corporate banks intend to do so. It is likely that corporate banks are not aware of their options, which are not yet as rich as those that retail banks have enjoyed. This means corporate banks need to find a way to deliver great experiences to their customers, to their corporate customers, without neglecting the crucial aspect of seamless business processes. At the same time, they need to continue working with existing traditional backend solutions until they identified a modern solution that is up to their needs, whether it is tomorrow or in 2 years. So what can corporate banks do to ease this situation? We think they need an architectural approach that delivers the needed digital capabilities quickly and can coexist and collaborate with traditional applications. Forrester has worked on this related concept for some time, and we call this concept digital banking platform architecture. It's about splitting what's traditionally been considered core banking and further backend solutions into 2 decoupled elements, the digital core and the lean core. The lean core focuses on data availability and consistency. It would, for example, shrink core banking in a lean fashion in that it would focus on data storage plus basic accounting and consistency rules. On top, the digital core delivers domain-driven, highly coherent business capabilities, for example, for the customer domain, using data that the lean core provides via APIs. Banking entities, business functionality around customers and accounts, for example, reside in the banking entity layer in the middle, ideally designed in line with business domains. When it comes to aggregation of capabilities, to orchestration, business processes, and event-driven approaches, then this is where the aggregation layer comes into play. For example, an account origination process would use various banking entities that would get assembled into an appropriate workflow within the aggregation layer. One word of caution maybe regarding event-driven approaches, event-driven architectures. Many application landscapes in banking use, for good reasons, long-running transactions. There's not yet a similar concept, nothing like, just to create a new term here, a long-running event flow. And these long-running flows represent a vastly uncharted country today, and they need to be carefully approached to avoid losing control. So this is certainly something to keep in mind when talking about events. But let's move back to digital banking platform architecture. On its top, the two architectural building blocks allow to deliver all these business capabilities, these hopefully flexible business capabilities to the outside world, to customers and employees, and particularly via APIs to partners. This is particularly relevant as corporate banking will use APIs to hook banking processes into its customers much more than retail banks do. And just to mention this, these layers represent what Forrester calls digital banking engagement platforms, the product category that comes with coverage of these upper three layers, but certainly also with different depth of capabilities in the banking entity layer, basically depending on the individual off-the-shelf solutions. So you may ask yourself, how will this help me when my bank's back-end capabilities don't deliver what we need? Actually, the entire architecture has been designed to foster coexistence of old and new technologies and architectures. For example, digital banking platform architecture can access the data of traditional applications via various means. Let me offer you a few options. If a bank's traditional applications can provide their functionality only via functional APIs, if there's no direct access to data, we can use these capabilities via the aggregation layer. It does work, but it reduces the power of digital banking platform architecture to kind of a fancy enterprise service bus. If data APIs are available, then the data maintenance layer can take care of them, virtually forwarding the data to the banking entity layer while providing a stable foundation for the banking entity layer. Then some banks and vendors alike use streaming capabilities to synchronize data on the traditional and the digital side. In both cases, digital banking platform architecture can show its full capabilities in terms of coexistence and also driving rapid change. And I'd be glad to discuss more in the Q&A part of our session today. So what does all this mean for corporate banks? Corporate banks need to position themselves to deliver superior digital experiences, highly convenient experiences, both for their customers and their employees. This is certainly an area that can basically quickly, but maybe not easily delivered, at least more quickly than on the backend side. At the same time, corporate banks need to drive seamless digital operations to deliver better outcomes, including more efficient and effective processes. Both areas are crucial for what I like to call true digital banking, seamless end-to-end digital banking and operations become more important. Since the start of the pandemic, banks had to close gaps that the pandemic made clearly visible. New digital services for bank customers and employees alike became mandatory due to limited or no access to bank branches, limited interactions, personal interactions at least, and certainly also to find ways to foster collaboration between employees working from home, for example, and with customers. These are some of the reasons why some people say the pandemic caused banks to deliver more digital capabilities in 3 months during the pandemic than in 3 years prior to the pandemic. While this may be true for some areas of digital banking in the bank's application landscapes, it is certainly not true for all areas, and certainly not for all banks. Let's move to the next topic. More and more corporate banks will need to navigate in banking ecosystems to integrate their business processes with those of their corporate clients, to position themselves with new business models and to create new revenue streams via a variety of different partnerships. This includes, as one corporate executive explained some time ago, making a bank's front office the back office of corporate customers. While this is certainly a slight exaggeration, it shows the direction of the journey. Banks will offer their business capabilities and maybe further resources, and corporate customers will hook processes, business capabilities, resources into their processes and systems. This will not only need a modern approach to ecosystems, an application design that Forrester also calls banking application ecosystems, basically a special version of digital banking platform architecture, but it will also create more mingled corporate and banking processes. Add multiple corporates and banks into the mix, and you have a set of requirements that will exceed what today's traditional applications can deliver. And this brings us to the fourth area. Corporate banks need to accept the need for innovation, culture-wise, mindset-wise, technology-wise, to push forward beyond what is possible in the first three areas and certainly others, and to reshape business and technology ideas, models, and foundations in the future. And with that, thank you very much for your interest. I'm glad to discuss later on.
Thank you, Jos, for your very interesting insights. Speaking next would be Andreas Analauskas, Director Client Relationships at AGTB. Andreas is leading the business development activities at AGTB, driven by the passion for innovation in corporate banking products and client experience. He is managing various AGTB strategic initiatives from partnerships and digital talent development to client relationships and new product rollouts. Leveraging extensive experience in corporate banking, he aims to ensure client-centric approach in bank strategic plans and decisions, while also shaping the vision for AGTB's digitally enabled client service. He will be talking to us about what it means to build a greenfield digital bank, what are the key digital differentiators in the corporate banking and onboarding space, how to ensure excellent client experience in digital-only bank. Over to you, Andrea.
Thank you very much. Thank you very much. Hello, everyone, and thank you very much, IXC team, for giving us the opportunity today to share. Excuse me. Oh, sorry. So yeah, thank you all for giving us today the opportunity to share the journey that we are on building the Greenfield Digital Bank here in United Arab Emirates. Anglo Gulf Trade Bank, or AGTB as we call it in short, was envisioned as the world's very first digital cloud-hosted trade finance bank that was aimed to service only the corporate clients. And the bank was started more than 2 years ago. At the end of last year, we received the full banking license, and currently we're operating still in kind of MVP stage, and over the next quarter, we'll be moving into the kind of fully fledged product offering, digital onboarding, digital client servicing, and the brand new trade platform. And I think one thing that I would like to highlight are the trigger points or the reasons behind the idea to create the digital bank from the ground up, and what it allowed us to do. So one of the key things was the ability to avoid the legacy constraints that the incumbent banks have. So from the day one, we created the technology infrastructure, the modular technology infrastructure with the best of breed vendors that allow us to really deliver of what we aim to achieve. And secondly, it also allowed us to create a centralized data lake where we can see, we can have a full view of client activities, we can have full view of client flows, and also we can operate everything through one centralized data point. It also allowed us to ensure from the day one that we are a client-led organization. So we listen to our clients, we create the frameworks and workflows internally on how to really react to client feedback. Another point was that we could work from the day one in an agile way. As we know, in a lot of incumbent banks, there's still a lot of legacy work, legacy approaches. For us, creating the digital bank from scratch meant that we could start working in an agile way. And last but not least was ability to really create a challenger, the venture culture inside the bank that allowed not only to attract great talent, but also to create that push, that drive inside the organization to really create those differentiating product offerings in the market. And one of the key differentiators that we ourselves to deliver in the market was the onboarding. We saw onboarding as a key differentiator for us here in United Arab Emirates. As you all well know, onboarding both for corporates or for SMEs is a friction point. And for us, it was even more important given that as a trade finance bank, we knew we'll have to onboard a lot of suppliers. And it's a well-known fact that a lot of trade finance programs actually fail or do not scale because of the hurdles of onboarding suppliers globally. And therefore, we focus on this a lot. We spend a lot of time optimizing the journey. We partnered with the IXC team, and they're leveraging their Epsilon platform to really deliver that front layer digital onboarding experience. And that allowed us to, first of all, integrate some digital enablers like digital signatures, which I think it's one of the first instances in United Arab Emirates that will be using, digital signatures to open the bank account for the corporates, meaning that clients, will be able to initiate the onboarding journey, submit all the information, and sign it digitally at the end without even visiting a bank branch or seeing the relationship manager. Other digital enabler that we embedded in the journey was the real-time identity verification solutions, meaning that, they're quite common already in the retail space, where clients make a photocopy of their ID or passport, and then they can have a video that identifies and matches with a document. But this was not a very prevalent feature in the corporate onboarding, and we're applying that to both the users of the client, but also the ultimate beneficial owners, to the directors of the entity that we are onboarding. So that really allows us not to require passport copies and those kind of other paper documents. We also, when looking at the onboarding journey, looked for ways to leverage the third-party data, building really ecosystem, at least here in UAE for now. So for example, we build an API link with the Abu Dhabi Global Market Registration Authority, where we are able to consume certain data from the entities that are registered here. And we're actually building on expanding that into the fully fledged kind of data flow, where we'll be able to receive all the documents that clients to submit to the registration authority, and then we'll be able to consume that. We also work with some startup accelerators here, kind of trying to see how we can accelerate and help the startups to onboard with us in a quicker way. And we also look for ways to accelerate the onboarding process on the back end for the operations team or compliance team. And one of the things was the optical character recognition solution that we actually currently think that is driven by AI and then natural language processing capabilities that allows us to extract information and data from the unstructured documents, meaning that, let's say, if client submits to us board resolution or articles of association that would take operations a few hours maybe to read and extract the right data, this solution extracts it and structures the data in the right and correct manner, and then feeds it into our compliance information system, saving a lot of time, reducing the number of errors for the whole workflow. And we're also looking, in the longer term, building the API links, let's say with the credit agencies, where once we start talking with the client, we're able to pull the data, credit reports from them directly, like S&P or Moody's. So this is just a view on how we approach the onboarding journey and how we try to really make it seamless, simple, and smooth for our clients. And there's a lot of questions also about the impact of the COVID-19 on digital banking. For us, I think it only validated this approach that we are taking here, because right now the client can start the journey and end the journey without actually visiting our branch, without submitting any of the paper documents. So it's all fully end-to-end digital journey. And I think as we move now into the as we move into 2021 and look into the future, I would just like to share a few of our plans and future visions. And one of the key things for us as a bank is the client experience. And it's not only client experience when it's, you know, nice and shiny, the kind of application on the digital channel, but end-to-end client experience across all the touch points the client has with the bank. Meaning that if certain workflows or certain steps for the clients get out of the happy path, if the client's stuck at some point or something is not working or he has a request that is not in the system, how do we ensure that we still deliver the client the same experience as in the happy path? Because, you know, I probably of you have personal experience with the banks when, you know, something is not working in the system and you then trying to, you know, call the call center, you try to send emails, you're being bounced back and forth between different departments trying to get the solution. So for us, this is one of the key elements in our offering that we wanted to achieve is the 360 client view, ability to really see all the activities, all the interactions with the client, and also ensuring the across all the channels the same constant client experience. So that's our kind of really vision in the long term that we want to achieve. Also, with next quarter, we're launching our brand new trade platform. And we'll really be accelerating our supplier onboarding. Will enable a new channel for us, that's ERP connectivity with the accounting systems on our corporate clients, and then we'll also increase the processing capabilities on our backend. And another element is also that we're looking forward to is the exploration of the new business models, because I think the benefit of our setup or modular technology architecture of our organizational setup is that if we see emerging businesses or profitable new business lines, we can swiftly move all our resources or certain resources to that direction and really build up and tailor-made solutions for the client needs. And one good example is that we started earlier this year working with one of the very well-known money service providers, Global Unicorn. They came to us attracted by our technological platform, and within a few months we managed to launch actually money clearing solution for them into UAE. So it just shows the capabilities in that fully digital cloud-based banking platform can have. So that's it from my end. I'm happy to answer any questions in the Q&A session.
Thank you, Andreas, for sharing your thoughts. Next, we have Stelios Pandouakis, Head of Solution Architecture Digital Transformation Division at National Bank of Greece. With a multi-dimensional professional experience in cutting-edge technologies for financial services and a very strong academic background, Stelios specializes in leading teams and delivering digital solutions. With advanced skills in all areas of digital product development, from ideation to realization, together with team building skills, he is now the head solution architect at National Bank of Greece for the agile delivery of digital solutions. Stelios would be talking to us about how National Bank of Greece is addressing the changing landscape of corporate banking. Over to you, Stelios. I think
thank you very much. I'm just trying to find my mute button. Thank you very much. Hello from Athens, Greece. Thank you for having me here. My name is Stelios Pandouakis. I'm representing NBG, National Bank of Greece. And just in contrast to Andrews, just spoke about his presentation. We're a very old bank. Actually, we are operating 180 years now. It's very nice to have that contrast in this presentation. We have a big market share, being one of the 4 big banks in Greece. And we are always having our minds as a customer first strategy. The last few years, we are during our digital transformation program, but as Joost pointed out, It's not actually a program. We are trying to have our mindset as a digital transformation all the time. Moving on, I would like to say a few things about what we think corporate businesses need from their banks. So the first and foremost is trust. Trust is something that banks have already, from the beginning of their existence, are trying to sell. So nowadays, what we think trust is first of all security, of course, but of course availability and partnership. Let's say that without availability, there is no point in servicing anything else, because nobody will trust to be your partner. Of course, the next thing is about digital experience. Everybody is looking for a full digital experience. Digital onboarding is the hot topic at the time, as Andrew said. We are the first bank and still the only bank in Greece that delivered the fully digital onboarding for our retail customers. And now we are working on delivering the same for our corporate banking clientele. Of course, transactions, customized approvals, sales, trading, FX exchanges. These are all there are a few of the most important services that our customers are requesting. One other thing that has emerged lately is about information. Most big enterprises have a group of entities, and they need to have an aggregated view. They need to have meaningful notifications that can work on. And one of the things that we offer based on our big data capability is market data insights for our customers. Even more important as of late is integration. Internet banking is still the king, but mobile is taking up very fast. But we think that IoT is coming soon into our lives for corporate banking, corporate clientele as well. We strongly believe that API's platform are offering the offering will be the differentiating factor in the near future for the banks. So we do have an API offering right now. NBG is proud of what offers. We have more than 100 different APIs to integrate for organizations to integrate to our systems. Other than actually core banking and open banking, we have KYC, identity management, ERP services, loyalty and wallet, data insights, OCR and document management APIs that our partners can value of and connect to our system to use our systems and go on with their business offer. This is a screenshot of our developers portal. It's under developer NBDGR. Big retailers in Greece are already using it, and we can see that they offer consumer loans or at their checkout process in their e-shops. We offer bill payment spots. We integrate with ERPs and payment initiation processes. One other thing I would like to point out is that InnoPay has evaluated many of the banks, and as you can see, we are the top right corner. We are very proud of that, and you can check it out yourself if you like in the developers NBGR URL. About our technology approach, we have a design first approach. This is our most valuable IP, even more than our code base. We take a top-down approach, first focusing on how a rational way for our services is to be used, hiding the internal complexity of our systems. As Andrew said earlier, because we are an old bank, there is a lot of systems integrating beneath the digital platform, and the services are growing in an iterative way, enabling us to deliver the most valuable services first before going to edge cases. At the same time, specific requests that most of our big clients, big enterprises are requesting, we see them as opportunities for further expansion of our services instead of trying to customize everything in our code base, making it actually unmaintainable in the near future. Our architecture allows for omni-channel availability of our services, being at the same time cautious so that every channel is independent in terms of availability. We are building cloud-native applications. Although I was very envy of what Andrew said, we are not yet in the cloud, but we are actually preparing for that when and the Greek regulation authorities are working on that, so we can move some of the services there. This will take away some of the risk we are facing during during high volume periods like the one we are running now for Black Friday and end of month. We are altering our processes to be agile so we can deliver fast in small development cycles, changing focus areas if needed, and constantly monitoring our results both in business and in technical terms. We have streamlined our delivery process, and cloud will further enable us in that direction. We're trying to use common tools for all our digital platform. We are generating cross-platform applications, and iExceed's offering is in that direction. We are trying to automate all the parts of the process that are now our pain points, especially testing of our application and deployment. Having said all that, I would like to thank you, and I think we can move to the Q&A session. Thank you very much.
Thanks a lot, Stelios. I would like all the panelists to come live on video so we can start the question and answer session. Okay, I would like Andreas to take the first question, please. So the first question is, looking to understand in the onboarding space, retail banking space is more advanced as compared to the corporate space. Any inputs on how to bridge the gap?
Well, it's a very good question. I think, as I mentioned earlier in my presentation, what we've seen with the challenger banks in the retail space really worked hard on simplifying and making really smooth retail onboarding journey. But on the corporate onboarding, was still lagging behind. And I think one of the primary reasons was that it's much more complex. You know, you have ownership structure, you have ultimate beneficiary owners that you have to map, you have longer list of documents from board resolution to articles of association to incorporation details that you have to collect from the clients. You also have different users with different roles. You have CFO, you have payment clerks that you have to onboard, give them the portal access to execute the payments. They might have some also payment authorization frameworks and limits and so on. So I think that complexity was probably one of the factors why the onboarding journeys for the corporate clients were, you know, less digital and maybe still more paper-based. And there's probably a regulatory aspect here as well, that let's say in some jurisdictions, digital signatures were still not accepted when onboarding the corporate clients or when giving them, let's say, the loans. And I think bridging the gap is really what we try to do at AGTB is taking the best learnings from the retail space, as I mentioned, for let's say identity verification, for the optical character recognition of the documents the client uploads, and really applying them into the corporate space. That was one of the ways. And other was really working with the regulator and trying to see how we also kind of push the envelope a little bit when it comes to, as an example, digital signatures. Because we actually had to seek legal opinion and to really get clarity if we were to use for corporate onboarding digital signatures, what would that mean? So it's a dialogue, between the regulator and the technology provider and us, ensure that we bring corporate onboarding on par as an experience to the retail onboarding.
Thank you, Andreas. The second question, I think, is for Jost. From a corporate banking perspective, where should the digital journey start?
Oh, wonderful. Thank you. So let me step a little bit back and respond first from a broader perspective. And some of you may know that Forrester has observed some kind of trend some time ago, 2 years ago, 3 years ago, where financial services firms, banks, preferred to basically create new glossy front-end solutions to polish the mobile channel, to polish the digital channel, and so on and so forth. And some of them basically neglected the back-end system, which basically led to a situation that Forrester called the Potemkin effect in banking, because it was about glossy facades, but no real-time capabilities behind that could support these glossy front ends. They couldn't support what I mentioned earlier on as true digital banking. So, and consequently, we were very pleased to see that many financial services firms during the last 2 years changed their direction in that they also looked a bit more on the back end side. They also looked at transforming the way how they deliver or produce the business capabilities, as opposed to just bringing them to their customers via the front ends. So certainly this needs some kind of, if you want to go for kind of a replacement of backend solutions, this needs some kind of modern system that is worth changing to. And as I mentioned earlier on, what we are seeing today on the corporate banking side is kind of a mixture of old and new solutions, functionally rich solutions, not so rich solutions, et cetera, et cetera. And I guess, unfortunately, this is pretty much the same situation as what we see on the off-the-shelf side. So we are seeing, to some extent, functionally very rich corporate banking solutions, be it on the lending side, on the syndicated lending side, on the trade finance side, you name them. But they do not have an architecture that is as modern as I would like to see them, that would really provide some leap compared to what we are seeing today. And consequently, my advice would be, and this is why I started a little bit earlier, it looks a little bit like a contradiction to what I said, in that I'm saying a corporate bank should probably start with a front end, using an approach that allows the corporate bank to access the data capabilities from the existing applications, while using the banking entity layer, new business capabilities, while buying new business capabilities next to the old solutions on the left side, on the right side. For you, it might be exactly the other way around. I'm not sure how the camera works here. So it's really about starting with what I like to call an engagement platform, and to use existing capabilities unless you have already found something that is definitely worth changing to, both from a technology and an architecture perspective. So to make the long response short, right now, I would suggest to start with an engagement platform, while preparing carefully from an architectural perspective that this kind of coexistence that I described earlier on will work in reality.
Thank you, Jost. Andres, the next question is addressed to you. What would you rate as the biggest impediment in delivering the best client experience? And if you could share with us on what you did to overcome this.
That's a great question, because we were facing that same question when we were building our onboarding journey. Because I think key thing here is understanding of what defines the best client experience for the target client segment that you're trying to serve, because even if you have a well-defined client segment, it's still not homogeneous, across from one client to the other. So for one client, best client experience would be having, simple user interface where within the 2-3 clicks he can execute the payment. For other client, that could be having his contact at the bank where he can, call anytime he needs to, execute a transaction. Third client, that could be, I don't know, having a quick service on some other product. So for us, it was key to really define that best client experience across these different elements, so that's, I think, the biggest impediment, because it's not homogeneous. It's not that, if you have great user interface, that would, in turn be a best client experience. No, I think it's much more complex than that. And how we overcome this, I think we put this as a different priorities, and we just measure that against, cost, time, and the impact. So should we focus more on the user interface? Should we focus more on, let's say, how clients can execute the payments in the quickest fashion, or whether they can actually request for the loan in the easiest way, and so on. And then, measuring that against each other will define how we would go to the market with what we saw the best offer in terms of experience.
Thank you, Anders. Thank you very much. Stelios, I would like you to take the next one. Do you see banking as a service taking off in corporate banking?
Yes, this is a very good question. Actually, I'm thinking that the telecom industry went through that journey. Of course, they have overcome this by servicing new type of services and new business lines. Although this is partly true, I think this will happen in some cases, and probably this is we cannot avoid it. But yet the thing is that we see our corporate clients are as partners, and together I think we can invest in servicing them better, not as a platform but as a partner. We are doing a lot of initiatives in that area, and we are inviting them, fintechs or any organization or developer, let's say, that we would like to share their view with us and build upon it, even invest on some good ideas. And this, I think, is something that is a key, not to become a platform, but to become a partner in business. Thank you.
Thank you, Stelios. We are running a little short on time, so I think we have time for just one last question. So Jost, over to you. Your data showed that corporate banks don't consider themselves as early adopters or innovators. What are the reasons for this?
Okay, I can certainly not look into the minds of the corporate bankers who responded to the survey, but I can at least speculate. And to start with, as we have seen here today, there are certainly, as always, exceptions from the rule. I think what we have seen both from Andres and Stelios are certainly exactly that, exceptions from the rule from an industry that is just in the process of catching up. But going back to the question, what are the reasons that they are not considering themselves as early adopters and innovators? First of all, for a long time, there was basically, as far as I understand discussions I have with bankers on the corporate side, no true need to become innovative. I would say, we heard the first digital-only corporate bank, right, today in the second session from Andres, if I remember the title correctly. And this was not, keep in mind, we are basically in the year 2020, and it's the first digital-only corporate bank, while we have plenty of banks on the retail side like that. So it's basically, there was no need to become digital only. There was no need to innovate business models. And this kind of, and corporate banks accept slowly that they as well have to change the way to do business. So this is basically some reason I could perceive without having interview data, research interviews, survey data about reasons for this missing interest in innovation. So changing business needs, more urgent need to innovate business models, number one. The other thing is probably on the other side of the fence. And as I mentioned earlier, when we look at business capabilities that are available off the shelf, we have to keep in mind that in total, financial services is today more interested in off-the-shelf capabilities than a couple of years ago. That there are many more very powerful off-the-shelf solutions available in the market on the retail on the corporate side. Don't get me wrong, I'm not saying there are no powerful solutions on the corporate banking side with modern architectures and great functionality, certainly not, but there are fewer. So there was not as much choice. And certainly if there's no choice, if there are no better solutions, this is also some kind of obstacle or a reason why corporate banks do not accelerate as fast as others in other areas, in retail banking, in private banking, and the like. I think I can certainly speculate for a longer time here, but frankly, I think I most likely touched two of the key reasons here.
Thank you, Oz. Thanks for that. There are some more questions, but we're running out of time. So we would request you to actually write to us and we will get back to you. So before I wind up, a very big thank you to all our panelists for sharing their thoughts and answering all these questions from the audience. If you have any further questions, feel free to get in touch with us through the website and we will revert to you as soon as possible. Thank you, everyone, and have a very good evening and a good day ahead.
Same to you.
Thank you.
Thank you.
Thank you very much.
Bye.